The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Just reminding traders, if they're new to this channel or if this is the first time you've seen this video, if you go to this playlist, everything you need is in this playlist as it is titled. We go over the templates, the timings, the levels, the behavior of price. This will help to bulletproof your understanding of the best trade setups in the playbook. Again, these are free videos on the YouTube channel to support and enhance the skills and the development of your trading prowess within the playbook itself. Everything you need is in this playlist. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be going over breakout trading, markets that close in breakout, and how hunting out the best playbook trading setups often starts with a market that closes in breakout. The object is to be focusing on 90-10 parabolic best trade setups, opportunities that are scalable, reproducible, and can be sized into. Now we have 3-day setups, we have 3-session setups, but the critical importance is understanding the opening range and initial balance. We can have Monday day 1 trades, Tuesday day 2 trades, Wednesday day 3 trades, and Wednesday resets into the backside of the week and begins a new day 1, Thursday's day 2, and Friday our day 3, free cash Friday. We have signal days, day 3 longs or shorts of breakout traders in the markets for potential reversal opportunities and in some cases trend trade opportunities as well. First red day signals, first green day signals, and the inside day false break and trend trade opportunity depending on where it presents. We also have the day 0 setup, a 3-day coil for an explosive range expansion opportunity. Sometimes they can show up in a 2-day pattern. And rarely we can get that interday or as a reset day, a day 0 reset day on a Wednesday that coils sideways into a day 2, day 3 on the backside of the week. So the parabolic opportunities, low-hanging fruit, first bounce with major red news all coincide with a longer time frame trading setup. Now the most important part to understand about breakout trades is that 2 things: most breakouts fail and the trend is your friend. So you've heard me use the expression, where is the money? And the purpose of that is understanding when the session that you're trading, how to identify potential candidates for a parabolic best trade setup. So not just trying to get a direction right, but which markets are coiling for a potential explosive move. We've talked about the weekly template, front side, back side. Monday, Tuesday, Wednesday, reset, Wednesday, Thursday, Friday. And the object is always the longer time frame template opportunity, but also on the day itself, do I have a candidate that is setting up for a parabolic opportunity, whether that be a Monday, Tuesday, Wednesday, Thursday, or Friday? So the object is to identify the best instrument which is set up on the day in the session that I am trading for a parabolic opportunity. Day 1, day 2, day 3, reset, day 1, day 2, day 3. Now for the purposes of today's video, we're going to just go through the general templates and look at markets that have closed in breakout, whether it's on a specific day itself or for a week, a weekly close. There are different types of breakouts. We'll look at primarily today weekly and daily closes and breakouts. So we can have a week that closes in breakout. That can be a potential signal of an upcoming week to be aware of, so that traders aren't trying to counter trend other time frame traders or looking for false signals against an underlying strong trend. Daily closes and breakout. Daily close outside of a previous weekly range
but inside of a daily level. A breakout on the day itself of the high or low of the week, and an opening that occurs in breakout. A market may break out previous to a session timing window, for example, a US index, and it may open outside of a breakout level, a high or low of a week level. We talk about two types of templates on the day on a best trade candidate setup, and that is a pump and dump or a dump and pump type of opportunity. Now, when we have a market that closes in breakout, often we can get a market that works the high again before reversing high of week for a parabolic reversal trading setup. And the same opportunity can occur for a market in the long direction, a market that closes in breakout, it breaks out a second time, works the low before coiling and exploding parabolic and reversing in the opposite direction. Understanding the opening range and initial balance can set traders up for identifying a day 3 parabolic opportunity on the front side. Opening range, initial balance, day 2 typically expands the range on the front side. Everything begins from Friday's closing price level as the new week begins, and we can have a market that establishes a high and a low and consolidates inside for an explosive day 3 parabolic opportunity. We talk about first red day opportunities. We can see markets that break out, close and breakout, consolidate, give a first red day signal for the parabolic reversal dump. And the same can occur also for the dump and pump, a market that closes in breakout, consolidates, and reverses. Most important part to understand to identify breakout trades, markets do three things. They break out, they pull back, and they continue. They'll break out, they'll fail and reverse, or they'll trade back and forth inside of a high-low range, and there is no breakout in place, which is where we establish high of week, low of week boundaries. But also, once the market closes outside of these areas, it can be potentially now setting up for a best trade candidate as that market plays through the template: Monday, Tuesday, Wednesday, Thursday, Friday. We'll go through multiple examples today. This PDF will be put into the course section, and we'll have a little title folder for breakout trading on the left-hand side. But this will help you identify best candidates potentially for first red day, first green day, but also 3-session setups and 3-day coiled templates, day 0 template opportunities. Simple, day 1, Monday's day 1, our opening range. The market breaks out, expands the range on day 2, closing in breakout on Tuesday, coiling sideways, giving a first red day signal on Thursday, and a parabolic reversal opportunity in our New York session. Now, this isn't just an example, a basic example of why in several cases there's a front side opportunity and a backside opportunity, and all traders needed to do was hit one of these opportunities in the session that they're trading, if it's available in their session. Instruments, as I've stated, to create a basket that reflects the opportunities in the session that you're trading, whether that's Asia, London, or New York, and understanding that on the closing range of the week, a 3-session setup, the New York session, can close out the week. And these are scalable opportunities that rinse and repeat. Market closes in breakout. If traders were participating in a day 2 range expansion parabolic trend trade, that market closed in breakout before coiling sideways. No breakout after it's broken out long in the long direction, but we have a first red day signal coiling sideways into the closing range of the week for Free Cash Friday reversal opportunity. Russell 2000, we have an example of a market that breaks out, closes in breakout on Monday, day 1, continues to expand the range on day 2. A market that closed in breakout, expands the range on day 2. We have a high of day shorting opportunity on day 3, the reset day, day 1, day 2, high of day reset opportunity in a market that is broken out. It's in breakout. Other time frame sellers are driving this move. Day 1 resets on Wednesday, day 2, continuation trade into the day 3 blow off on Free Cash Friday, day 1, day 2, day 3. A market that closed in breakout on the opening range day 1. And again, if you establish and identify the levels, closing price becomes the ceiling into the backside, which high of day shorting opportunity day 3, lower closes, breakout traders in the market, and the reversal in the Asian window on Free Cash Friday. Swiss franc. This previous week, we had a market that broke out on Thursday before pulling back, closing back at the breakout level on Thursday. Friday closed outside. So the market closed within Thursday's range, but it's outside of the previous day's low of day level. So it's still in breakout. That breakout pulled back and closed on Friday in breakout. And on day 1, Monday's opening range, they proceed to work the high into the breakout level of Thursday's low of day. Pullback inside day 1, day 2, coiled first red day on Tuesday, coiling sideways into the Europe Open on Free Cash Wednesday for a parabolic explosive range expansion short trade in the London window. This market started this large move by breaking out. This is an example on the euro this week. It closed on Friday in breakout. Monday, day 1, expanded the range. We had higher highs. So the market's closed in breakout. We have our closing price of Friday as our reference point. The market puts in a higher high before closing back inside of the range, but we have a higher high on Monday. Did not break out, close and breakout, that is. And Thursday's closing price, if you recognize this is now a box coiling sideways. Day 1, day 2 becomes first green day. It reverses back above the closing price, coiling sideways on day 3. Parabolic opportunity in the long direction using our universal entry criteria from the playbook. Day 1, day 2, day 3 blowing off in the direction of the trend. Again, this market closed the week in breakout. Other time frame buyers are potentially driving this move. Aussie dollar, an example of where the week closed in range. So the Friday closed in range. We had a peak formation low and a peak formation high, an outside day on the Friday, the closing range of the week. A higher high made on the Monday, day 1. Higher high is potentially a setup for a dump and pump template. Tuesday closed as a first green day. And again, if you go back and look at the closing prices, they have not broken out. They have not broken out. So we have markets that have expanded the range on the high and low of the day levels, but has not closed in breakout. We have a first green day signal, a market that coils into the US Open for a parabolic explosive day 3 range expansion in the long direction. This previous week on the Aussie dollar, a week that closed in breakout in the long direction. On Monday, day 1, we had a first red day that closed below the open and broke out on Tuesday, day 2. It's now closed in breakout. Wednesday was an inside day, and the reset day forms a peak formation high, similar to a first red day template. Lower low on the backside on Thursday, day 2. So again, understanding day 1, day 2, day 3 trading setups based on the templates. A signal day, so we had an inside day triggered. In the long direction, markets coiled sideways without taking out the previous day's high before breaking down third hour in the New York session for a first red day on the backside of the week. A market that closed in breakouts, other time frame sellers now potentially driving this move. Breakout, pullback, continuation. Canadian dollar. This is an example of where a market broke out on Monday, the opening range of the week, made higher highs on Tuesday, day 2, and closed as a first red day. Several traders asked about this, and this is an example of where we do have a first red day shorting opportunity from closing price of Monday's opening range in our London window that takes out the low of day level. Now, traders were looking for this continuation trade, and they're trading down into the peak formation. This market gave a long coil reversal on day 3, a low of day coil back to high of day on Wednesday, day 3, resetting into the backside of the week. But a market that closed in breakout in the long direction. And if you follow closing price on Tuesday, day 2, on the backside, we have a U.S. session long opportunity in line with the original breakout in the long direction. Day 1, day 2, day 3 resets, closing as an up day, a long closing day, coiling sideways. Again, I've mentioned to traders, train your eyes to move horizontally. Now, the question always is, was this the best candidate on the day in that session? But if traders were trading this, to be aware of not counter-trending the underlying breakout that is still being driven by other time frame buyers in this market. Backside of the move, day 1, day 2, day 3, blowing off in the direction of the trend. Japanese yen, a week that closed in breakout. Monday's opening range makes a lower low before pumping up and triggering longs at the high of the opening range, Monday's opening range, inside of Thursday and Friday's closing price levels. Again, you'll notice a consolidation forms a box. And on Free Cash Wednesday, that coil, that breakout of Monday's high of day level fails into the Europe Open, coiling for an explosive range expansion opportunity on day 3. Day 1, day 2, day 3. In a market that closed in breakout, we now have a market potentially driven by other time frame sellers driving this move. Mexican peso closed in breakout in the short direction. That market reversed and made higher highs on Monday's opening range, closing still inside of Friday's range, dumping down inside day on Tuesday, double inside day potentially Tuesday, Wednesday, and a market that gave a day 2 first green day opportunity on the backside of the week, a short squeeze range expansion breakout trade on the backside of the week on a market that closed short in the short direction. So understanding we have other time frame sellers now potentially trapped down low into the backside of the week, a double inside day for an explosive range expansion, a breakout pullback continuation trade in Friday's New York session, beginning with a week that closed in breakout. Crypto, I receive this question all the time. What do you do for crypto? It's a different market, and all markets are the same. It doesn't matter what instruments they are, whether they're shares, currencies, commodities, indexes, etc. With crypto, I ignore the weekends. The process begins as per normal. On a Monday, we had a market that closed in breakout on Monday's opening range, proceeded to make higher highs, closing in breakout again on Tuesday, and that formed a day 0 template. Day 1, day 2, day 3. Wednesday formed a first red day into a market that is closed in breakout. That gave us a nice day 0 coil into Friday's closing range. It gave a short trade on day 2 into the low of day level for coiling sideways and exploding in the New York session in line with our original breakout. Markets that close in breakout. This is silver. We have a market that Monday was an inside day, again a signal day, alerting traders potentially to an opportunity that gave a false break reversal in the New York session on Tuesday, day 2. That market closed in breakout, reversed in the Asian session and broke down into the London window before pumping back up, coiling into the third hour in the New York session for the low-hanging fruit, parabolic, explosive move through the low of the week. So we now have a market that's closed outside of the previous low of week level in breakout, and that market pumped up on day 2 on the backside before coiling into the third hour and exploding and continuing a first red day continuation trade on day 2 and blowing off on day 3 in the direction of the trend. Markets that break out. Copper is an example of breaking out on the previous Thursday before pulling back on Friday, closing back inside of the range, and then breaking down. And this is an example on Tuesday where Monday's closing price is actually below the breakout close on Thursday. So we have a market that's in range, within a daily range, but it's actually closing outside of a previous weekly level, breakout level. confirming that this breakout is now still active, and an example of where a market continues to break down throughout the rest of the week. Other time frame sellers driving this move, depending on the session that you're trading, potential opportunities for selling high in a market that continues to break down and make lower lows. The NASDAQ, a market that closed in breakout, end of the week, inside day on Monday, trading inside a short squeeze opportunity, a day one trading opportunity. We'll talk more about those later. Breaking out on Tuesday and closing in breakout on day two. Closes in breakout. Wednesday trades from high of day to low of day, triggering a first red day signal. That was an FOMC day. Before breaking down, a breakout pullback, explosive day two trend continuation trade on the backside of the week, a market that breaks out, pulls back into the closing price of our opening range. So we have a market that on Monday's opening range explodes. We have Friday's high of day level broken. Breakout traders are in the markets. It pulls back, coils on top of Monday's closing price before exploding and continuing that day two trend trade on the backside of the week. The NASDAQ, again, an example of a market that closed in breakout on a Friday. Broke out again on Monday's opening range. Higher highs on day two before coiling sideways into day three and continuing to break out again. Closing in breakout on Wednesday, day three, setting up for a backside high of week. Huge opportunity for traders into the New York session for a market that had closed in breakout after a week that closed in breakout for a massive GBT opportunity on the backside, and then a reversal again, a market that closed in breakout on Thursday, and the low of week reversal opportunity in the New York session. Markets that close in breakout. The gold closed in breakout on Friday. It was an inside day, but the market, the week itself closed in breakout. So being aware that although the day itself was an inside day, that's a signal day. That market made higher highs on Monday's opening range, triggering longs of an inside day in a market that had closed in breakout, offering traders a parabolic continuation trade in the New York session. That market stayed in breakout at the close of Monday's opening range and continued to auction higher highs again, a dump and pump template on day two, closing in breakout at the high of the week, day one, day two, day three, coiling sideways, high of week, high of session, shorting opportunity that closed as a first red day, coiling sideways underneath of Tuesday's closing price. So again, understanding that the closing price is in breakout, it now becomes a potential ceiling on the backside of the week. The market pumps up into the high of day closing price level before third hour and then reversing fourth hour into the end of the session, blowing off in the direction a pump and dump Monday to Friday template, day one, day two, day three, reset, first red day, coiling sideways, a first red day shorting opportunity that continued to blow off from Asia, London, and New York, taking out the low of the week. A market that had closed the week in breakout continued to break out before reversing. NASDAQ again broke out on Thursday before pulling back inside into the close of the week. Monday's opening range pumping back up into Thursday's low of day level. Wednesday's low of day level. And putting a peak formation and closing as a first red day on Tuesday. So just sitting on your hands and waiting. That market broke out and closed in breakout on Wednesday. So again, I mentioned to traders not worrying about chasing all the moves, but waiting for the market to set up. I'm only looking for one or two opportunities, and there are several different types of opportunities throughout the week, but this was an excellent opportunity for first red day trade on the backside on Thursday. A parabolic coil exploding, continuing the short direction trade. And then a low-hanging fruit continuation, a choppy market on Friday, but a parabolic explosion third hour on the backside after the market had closed in breakout on Wednesday. This is an example of where a market broke out, failing on the closing range of the week to at the high of the week, it broke out and closed back inside of the range, Monday closed as a first green day. So understanding again that Friday's closing price is where everything starts from. We have a low of day level reversal on Monday that closed as a first green day, and a coiled day 2 parabolic opportunity on Tuesday that ends up closing in breakout. That close in breakout now signals another parabolic explosive opportunity on Wednesday, and that continued into Free Cash Friday after non-farm payrolls, a market that continued to explode in the long direction. Higher high, a failed breakout, a market that coiled, gave a first green day signal, a perfect textbook first green day template, and then a market that continued to do a range expansion over the course of the end of the week and into the new week. A very large opportunity for position traders who are holding or leaving a trailing opportunity into the market, and also recognizing that we were at the beginning of a new month, a new timing cycle. NASDAQ, again, an example. It doesn't matter what market. I'm just going through different templates to show traders that recognizing the importance of the signal of a market that closes in breakout. The week itself closed in breakout, so traders might look at this and say, well, there's no signal, it didn't close in breakout, but the week itself closed in breakout, made higher highs on Monday. So understanding that when a market breaks out, closes in breakout in range, inside of a previous day's range, but outside of a previous daily level, which formed our peak formation low of the week. This is a day 0 3-day coil. Day 1, day 2, day 3 going parabolic in the long direction of the breakout of Friday's high of day level, reversing, giving us that reversal opportunity, recognizing that the close was outside of Friday's range, a close in breakout. Some shorter time frame opportunity, just same types of triggers, but looking at the daily templates themselves. The NASDAQ, a week that closed in breakout. Day 1, a short squeeze opportunity after the New York Open, coiling at closing price and exploding back in the long direction. A beautiful textbook dump and pump template on Monday, day 1, a week that closed in breakout. Another example, different instrument, different session, a week that closed in breakout. The Euro Yen, a parabolic reversal opportunity in the Asian window to start the new week after a week that had closed in breakout, Monday, day 1. Pound Australian, a day that had closed, Friday had closed in breakout. Monday worked the low of the day into the U.S. session for an explosive reversal opportunity in the New York window after a market that had closed in breakout on Friday. An example of a day 2 trend continuation in the Asian session, a market that, again on a Monday opening range, closed in breakout. Tuesday, day 2, typically expands the range, gave traders a coil sideways and explosive continuation trade in the Asian session for the Pound Australian. Dow Jones, an example of a market this week, previous week, that closed in breakout, higher highs on Monday, a beautiful day 2 coiled dump and pump template, high of day from Monday's opening range, coiling sideways after major red news, continuing a range expansion. That market closed in breakout on Tuesday. Another dump and pump explosive parabolic continuation template on Wednesday, day 3. And then the reversal template forming a first red day after closing in breakout again on Wednesday. A market formed a first red day, also closing in breakout. Several traders continued that short bias trade into the New York Open after the first red day signal. Closed in breakout on the week, continued to break out before reversing, coiling, and continuing that short direction. An example of the day 2 on the Dow Jones, higher high, the coil sideways, major red news, and the New York Open coiled in a parabolic setup right at the New York Open on a day 2 range expansion template. Silver closed in breakout on Tuesday this week. Monday was an inside day. So inside day, we had the market explode, triggering the low of day, breaking higher on the New York Open before coiling and exploding back through the high of day level, closing in breakout. That set traders up for a Wednesday, day 3 parabolic reversal trade after that breakout failed. Russell 2000, an example again of a day one low of week reversal opportunity in the New York session on a market that closed in breakout. Closed in breakout, broke out again, worked the low. New York session, third hour explosive reversal on a day one template, low of the week. Day three that closed in breakout, resetting as day one on the Russell. Thursday, day two, coiling sideways underneath of closing price. Paul Tudor Jones, think of your entry point as last night's close. Peak formation high into the closing price level on a market that closed in breakout before coiling and reversing at the New York Open back into breakout traders who were in the money. Another example of a Monday day one template, a week that closed in breakout, a low of week level. Lower lows, we redraw our levels. The market worked into the low, New York Open, coiled into our third hour, fourth hour opens, exploding for a huge parabolic opportunity on day one after a week that had closed in breakout. Gold, this is from the beginning of July, the Friday closing in breakout. Asia forming a high-low underneath of closing price, breaking down in our London window, giving us a pump and dump in the New York session for the low-hanging fruit continuation trade back into breakout traders from Friday's U.S. session. Example again of day two expanding the range, a market that closed in breakout. Monday's opening range, higher highs on day two, peak formation low, and then higher highs at our New York Open, coiling, and a third hour explosive range expansion in the New York session. On the front side of the week, closed in breakout, day two typically expands the range, a market that's made higher highs, that's the dump and pump template, coiling and exploding using our universal entry criteria. Day two front side in a market that closed in breakout. Other time frame buyers driving this move. Natural gas, an outside day on Friday, a market that broke out and closed in breakout on Monday's opening range, an inside day on day two Tuesday, and a parabolic continuation trade on Wednesday, day three. So other time frame sellers driving the move. Signal is a close in breakout. Inside day, a market coiled sideways above the low of week level into our US window. Smaller time frame, we have a parabolic coil exploding for a range expansion on day three on a market that closed in breakout. The important thing to understand is that all opportunities are not the same. The object is to find the best candidates on the day in the session that you're trading that can potentially identify for the best trade candidate or the setup that you're hunting for, whether it's a first red day, a first green day, an inside day, or a coiled market for an explosive range expansion on day two, trend trade on day three, reversal trade on day two on the backside, or a continuation trade on the backside. Which market is coiled and set up the best? Instruments that close in breakout often can give us those signals, a weekly close in breakout for a failed breakout opportunity, or a daily level in breakout, whether that's a trend trade or a reversal trading opportunity. Which setup have you mastered? Which setup are you hunting for? And which instrument is set up for that best trade candidate opportunity? Focus on the simplest, easiest parabolic opportunities in the session that you're trading. Keep it simple. Look for markets that close in breakouts on any of these time frames or breakout on the session itself in line with your larger template thesis. Keep it simple, traders. Master one setup and every aspect of that setup. Keep it simple. Enjoy your day, and may the markets go with you.